Hey, what's up, folks? Hello, everyone. It's your boy Toxic. So today is Tuesday. Today is Tuesday. I would like us to look at what the market is actually telling us today. As you can see, I said on our market focusing, I said I'm seeing GXY to buy and I'm seeing our GU and EU to sell, right? So let's head right down on our analysis. Let's go straight to our GXY. Okay, guys, so this is our DXY. Go straightly to the weekly time frame. I will go to the monthly time frame. So I will start analyzing from the weekly time frame, and we will take our analysis based on the weekly time frame. So yes, our DXY. This was our DXY we spoke about on our market focusing. So if you haven't watched the market focusing, just check the last video I posted. That was on our market focusing. So as I earlier said, we had this break of structure. We had this break of structure to the downside here, and after that break of structure we had a tap into our demand zone, right, which is our order block. As you can see, there was our order block here, so we drew our order block all the way this way. So always make sure you identify where your order block is sleeping so you will not be the liquidity in the market. So now we had a break of structure at the downside. A lot of people anticipated buys to the downside, but when the market tapped at this order block, we had this rejection pushing to the upside. So after that rejection, now we had this high here. We had this high, as I earlier said in our last class. We had this high, and when you look at this high, the market came and sweep out liquidity at that high. But for me, I am looking at DXY. I'm looking at DXY to buy all the way to this level. That's where I am looking my DXY to buy till that level. So after the market tapped in, we had the change in the state of delivery at this area here, at this change here. So now if you notice what the market is actually doing, if you look at what the market is actually doing now, after the market swept liquidity and came to the downside, what are you observing? You're observing the previous week candlestick was bullish, and this week candlestick is kind of printing was bearish. Sorry, the previous week candlestick was bearish, and this week is kind of printing the bullish scenario. So what am I anticipating this week? I'm anticipating, let's go to our daily time frame. So in our daily time frame, as you can see, so this is our daily time frame. As I earlier said the last time, I said the last time that we are expecting price to come down to this area of price, before buying. But then I also said in the last class that is a order block or a demand zone for the demand and supply traders. That is a demand zone, right? Price just taps in. So price must not necessarily bring, or like price must not come all the way down before actually rallying to the upside. You get the point. Price can still turn in a fair value gap. So we had this fair value gap here after our order block. We had this fair value gap all the way here. So price must not come down to your order block. Price can still tap in your fair value gap and start going your direction. So what do you observe here? After price came, that was what happened yesterday. Yesterday, he bought all the way to this level. So you can see this is yesterday's high. So we have yesterday's high all the way up, and 1 minute. Okay, we have yesterday's high all the way up there, and we have yesterday's low all the way down here. So what will you understand as a trader? As a trader, you need to first of all start by understanding we are in an uptrend because we had a change in the state of delivery here. So I'll remove this and I'll show you we had a change in the state of delivery here. So this sell that you see was just actually like a pullback. That was a pullback to come and fill in the internal range liquidities that are sleeping in the market, or the internal range liquidities that are situated at the downside of the market. As you can see, we had the fair value gap, and an example of internal range liquidities are examples of fair value gap, order blocks, mitigation blocks, breaker block. Those are examples of internal range liquidity. So moving further to the to the 4 hours time frame to have more understanding on our trades. You start by going to your 4 hours time frame. You get to understand that in this 4 hours time frame, what can you observe? The market at the 4 hours time frame still gave us a major change in the state of delivery. Now, look at this scenario. The market changed in the state of delivery at this area here. We had this break of structure. Okay, after that break of structure, we had the fair value gap. We had this fair value gap down here. So this is a fair value gap, and this is an order block. This is an order block all the way here. So we had this fair value gap, and we have this order block. So where do you see price actually going to right now? Normally, according to trading, or for me, according to my strategy, I'm not an aggressive trader. Once I saw this rejection here, I'm expecting price to maybe tap here, give me a change in the state of delivery, and I rally to the upside, as I earlier told you guys in our market focusing. So let's head down straight to maybe a smaller time frame to see what the market is actually doing. But for me, I will not take trades till I see what I want to see. You get the point. Till I see what I want to see, I'm not taking any trades. So in this smaller time frame, you can do more refinement. Let's try to do more refinement. That's our fair value gap, our order block all the way here. Yeah, we can do some few refinement, because when you go to the smaller time frame, you start seeing how the candlesticks play. So yeah, this is what I'm expecting. Downside, changing the state of delivery, and boom, to the upside. So okay, without wasting much of your time, so that's what I'm looking at. So I will be patiently waiting for the market to give me what I want to see. Patience. The forex market is just all about patience. Once you're patient, you'll get what you want to get. You get the results you're looking at. So firstly, you need to understand you must not trade every day. So the thing is, you need to wait to see the confluences, to see what you're looking at. So without wasting much of your time, I'm gonna go to, let's say, GU. No, we go to GU first. Let's go to GU first, and from GU now, I will start looking at the other charts and tell you people what I'm expecting in GU. So in GU, I said that the last class, I said in the last class I will be expecting a buy before a sell. In GU, we'll be expecting a buy before a sell. So GU, this is our next draw on liquidity up here. So I'm gonna label this place. I'm gonna put a name there. Draw on liquidity. Draw on liquidity. Okay. So here we're gonna put our draw on liquidity at this level here, and we go now straightly to our daily time frame. So guys, this is our daily time frame. So what can you actually see from the daily time? Hey, why? Sorry guys, my dogs are making a lot of noise. So let's focus on what we are doing. So this is our daily time frame, right? So in this daily time frame, what am I supposed to start looking at? I'm supposed to look at the previous day candlestick. So what happened yesterday, and what happened yesterday will determine what will happen today. For me, that's how I look at my market. That's how I approach the market. So on Friday, remember, each candlestick here takes 1 day of price action. So on Friday, I'll just say on Friday we had this candlestick, yesterday Monday, and today is Tuesday. So I will mark out Friday. I'll start by marking out our Friday low, because that was the last low of the market before they had the close, and I will mark our Friday high definitely. So what can you observe from this? You see, the market took out the Friday low and the Friday high yesterday, telling us there was a lot of consolidation in the market, and the market was bearish, like the market sold to come and take out the Friday low for buying back to, or rallying back to the upside, rather to close within the range. So without wasting much of our time, now I will be looking at the 4 hours to look at more confluences in my trade. So In a 4 hours time frame, you will definitely see after taking out the Friday low, we had these buyers. So what are you expecting this trade to do? You're definitely looking for a buy opportunity from this level, targeting this next draw on liquidity. And before doing this video, I'm already in the trade, so I'm just showing you guys how I approach my trade. So now this what I'm looking for in our GU. So I'm looking at GU to buy all the way up there, and I'm looking at our DXY to sell to collect liquidity on the downside. So let's continue to the next pair, which is our EU. So EU is kind of, how can I put, EU and GU, they are both pairs that they almost move together, because when DXY is buying, they buy. When DXY is selling, sorry, they buy, and when DXY is buying, they sell. But these days, I don't. These days, EU and GU doesn't move the same. These days, they doesn't move the same. So in GU, you are looking at buy, but when you come down to your EU, you got to be looking at sales. You have to be looking at sales opportunity. So in EU, what am I looking in EU? EU, I'm definitely looking at a sell, because if you look at our Friday, this was our Friday high. It was our Friday high here. And what can you see? The market took out the Friday high, which was liquidity, because the highs and lows of a market are always liquidity, and break the Friday high with a closure. So just with this information, it gives you the confluences that if you come to your lower time, like the 4 hours, what are you expecting? You're expecting more sales to the downside, because this now automatically gives you a change in the state of delivery from the buy side to the sell side after the market have collected the liquidity in our Friday high. So if you notice, on Friday we had a consolidation, and now if you look at Monday, we had a distribution to the downside. So now at this level, what are you supposed to be looking at? This level now, you're supposed to be looking at sales in our EU. Now when looking at sales, you can put your TP slightly above this high, because you can definitely see there's a fair value gap behind it, and you target this low down here, this low, yeah, target that low. So this is a two. Let me just say two is two. Let's just make it three. Let's just make it three arrow. Okay, so that's the three risk to reward trade that you can take on your EU. But normally EU is targeting this liquidity all the way down. So but for now, you need to take trades based on the next draw on liquidity. So where is our next draw on liquidity? Our next draw on liquidity is sleeping all the way here. So you need to start by taking out this level for your next draw on liquidity before you actually start looking at other confluences. Other confluences, like if you break that low with a closure, or it's gonna come and do a rejection to buy back to the upside. Voila. So let's go to our next pair. So in our next pair, I would like to look at BTC, because I had an analysis on BTC. So I'm trying to see if BTC is actually gonna respect my analysis or not. So BTC, I'm still patiently waiting. Like you can see, I expect BTC to buy to the upside, collect liquidity from that fair value gap, and push to the downside. So for now, I haven't seen anything yet. So I'm still waiting. If BTC is just gonna continue selling, or BTC is go back to the upside to collect liquidity. So for now, I'm just patiently waiting to see. But if I see BTC break below this low, if I see BTC break below this low, then definitely I'll be looking for small sales in the market if BTC break below that low. But for now, I'm looking at BTCs to buy, collect liquidity before pushing to the downside. Okay, so let's go to our next pair, which is USD CAD. As you can see, USD CAD, this USD CAD, I was expecting price to come all the way down here, but let's look at what price is actually doing, and why the price not come all down to this order block. So I will start by removing all of these things. So in our daily time frame, firstly we need to understand that the candlesticks are not yet fully formed. So that order block is not yet fully formed, because here you can see we had this fair value gap here, And this candlestick, we see we are still in the today, so the today time frame is not yet fully formed. So what am I supposed to do? Now I need to mark yesterday, what happened yesterday in the market. I mark out our yesterday highs and I mark our yesterday low. So if you start by understanding what happened in the market yesterday, let's look let's look at this candlestick here. So you have Thursday, Friday, Monday, Tuesday. So let's start from the Thursday candlestick last week. So when you come from the Thursday candlestick last week, you start by understanding we have that high and that low that price haven't taken now. So when price came to our Thursday low, it took out liquidity and rallied to the upside, closing above the Thursday high. So Friday was just a consolidation, and you see yesterday Monday came. So let's mark our Monday candlestick. So Monday came here and at what happened in our 4 hours time frame. So in our 4 hours time frame, this is what happened. Thursday gave us this high here, and this low down here. So Friday was just a consolidation that took out liquidity from the downside and consolidated. So now Monday came and gave us the actual move. So this was where our Monday candlestick started. So Monday gave us this break of structure. You see, from this other block here, Monday gave us the break of structure that we are seeing all the way up here. So this break of structure was yesterday. So Monday gave us that break of structure. So from that break of structure, now what are you expecting? You cannot be expecting the price action to come all the way down here when you are not seeing any valid fair value gap on other block. So price price did a little bit of reversal that if you go to our smaller time frame, okay, yeah, you can actually understand. So for me, I actually look at price came down here all the way down here to take out this level. See, to take out this level. So price came down here to take out this level. And once price took out that level, price now, where are you looking at your next draw on liquidity? If you took this trade here, you'll be looking at your trades all the way up there, and this is a 5:6 to 1 arrow. That's your first take profit and your second take profit. So you see, you're almost hitting first take profit if you took this trade. So it's very simple to understand. Try, when you analyze the market, try to understand what happened 2 days behind, what actually happened in the market 2 days behind, and you look at what is happening to the market now. So that's how you get some confluences, and you wait patiently to see what you want to see in the market. So moving now to our next trade. So now I spoke on this trade the last time on our market focusing. So I said if this trade doesn't break this high, I'm not going in for this high. I'm not going in for a buy. So what happened? If you look on Monday, this trade was around here. I was expecting a broke. So when you look on Monday, what happened on Monday? Monday gave us a sell to come back to this other block down here. And after tapping to this other block, the market started buying to the upside. Normally, I was supposed to take this market from this other block because I actually saw a valid other block and I saw a sweep in that other block. So this now was supposed to be my first take profit if I had taken this trade from this other block. But because I was not around and I was not like monitoring this trade, like here you had a very good 6 risks to reward, but I was not on the chart, so I missed this trade. So now where are you looking at this trade to head to? This trade is going all the way up. So let's look at our weekly time frame. If you look at our weekly time frame, tells you this trade is presently turning to continue buying to the upside. As you can see, that it has been uptrend ever since. So that was just like a pullback. That was just a minimal pullback to take out liquidity, and as you can see, price took out the liquidity, and now price is rallying back all the way to this draw on liquidity up here. So this is the next draw on liquidity up here that price is targeting for now. That's what you can, that is where you can be looking at your next draw on liquidity. So it was a good trade I missed, but it's better to miss a trade than to blow your account, you know. So there was a good trade I missed. And let's go now to the last pair. I will just take some few pairs. I am not gonna buy so many pairs. Let's look at USD card. Okay, my USD card is going. As you can see, we have already spoken about this. It's going. So I would like us to look at GPP JPY. Okay, this GPP JPY. So GPP JPY, I spoke about this trade in the our market forecasting, and I said the market will come all the way to take out this level here. So this level was our order block. So this level was our order block, and then this was our fair value gap. You don't really need to know much of of the highest thing you need to know is how to identify an order block and a fair value gap. And you don't need, and price necessarily doesn't really need to come down to your order block. Price can still respect your fair value gap and move to the upside. So this trade, I've been holding this trade since last week because I saw the trade and everything was perfect. So we hit TP, we hit our TP, and now we are still going much to the upside. So if you look at price is already reacting at this liquidity here. So what am I expecting next? I'm expecting to look at price action at that level. So if price can break that level, let me show you guys something. So if price can break that level, because our TP have been hit, so if price can break that level, I will be anticipating for a pullback. Now, when I wait for my pullback, normally I will wait for my pullback somewhere at this level. I will choose this level for my pullback because you still see we are still pushing to the upside. And there was the last candle before the impulse move that gave us this break of structure. So I'm waiting for a pullback. Anytime price come back to this level, I will take a buy going to the upside, and price is still heading to the upside. So for now, just waiting patiently. I've hit my first TP, so now it's just to wait patiently for execution for of the second trade. So what am I trying to say, guys? Trading is just you actually understanding some few confluences. Like if you understand the difference between an order block, a fair value gap, indication block, and if your strategy, because each strategy, like all strategy, are perfect. Trend line works very well. Demand and supply, support and resistance, all strategies are working, but it just depends on you, the trader. Forex is about you against yourself. Forex is not about your strategy. Your strategy is just 10% and 90% is you. You need to work on yourself, patience. You need to learn how to be patient, guy, because that's one of the most difficult tasks in Forex. It's not about having a strategy, but it's about how patient you are. So when you're patient, always have good traits. And thank you guys